Hi, welcome to the market alert for Thursday, the 13th of July 2023. So the soft CPI sparks bond buying bonanza, meme stock melt up, and gold gains as dollar pukes. Yeah, the dollar's dropped to its low of 2023. No surprise there, we had a look at that yesterday. US consumer price inflation drops to 27-month low. I'm not seeing it in this country, but there you go. But services inflation remains sticky, and dollar hits year-to-date trough after CPI induced rip in stocks and bonds, as I said it would yesterday. If they dropped the inflation numbers, the market would rip higher. Took advantage of that fact, and it was a good day yesterday. On the long side, they started off early, but we'll look at that in just a moment. Economic news today. Got GDP out. CPI on the brain here. GDP out at 7 a.m. Then we've got some US news at lunchtime. It's inflationary news, PPI, core PPI, and then we've got unemployment claims as well. Let's kick off. Let's have a look at the Dow. See what the market did yesterday. Work our way through as we normally do. So yesterday we see the Dow ripping higher, as it said in the headlines. A bit of selling around though, because the market came off the highs before the close, which you can see there. You've got the close price there, but it's starting to move a bit on the overnight back to the upside. Let's just expand this out just a bit so you can see a bit more clearly, and drag this over. So you can see that we've traded up to this high, which was 34,571, but the Meister market's not actually trading a bit higher there. 30-minute chart, you can see the market ripping higher there. Just have a quick look, see how many points we put on during yesterday's session. We kicked off with the market putting in that low, and then up until afternoon, 333 points on the upside. For the Dow there. Then we pulled back, which amazing. I got a bit of a sell-off going there on the overnight. Let's have a look at the DAX, see what that did yesterday. Well, yesterday, as I mentioned in the alert, so let's just go down to a smaller time frame. Let's go down to the 5-minute. So in yesterday's alert, I mentioned that the market would rip up to the through the previous day's high, and it did. But then they brought it back, and as I've said before, there seems to be a classic picture at the moment for the DAX. They sell it off and then they move it to the upside, and then it never stopped. So we had the shakeout to the downside. You can see the cluster of volume there, and then the market moving to the upside for the remainder of the session, and it was just brilliant. It just kept going all the way up until we had the CPI numbers, where you can see the market's reaction to this. And just from the CPI numbers alone yesterday, we saw the market moving up a good 130 points there. We go back to the 30-minute charts, and you'll see there's the entirety of the move. And again, if we just have a look from the low of yesterday all the way up to the high, and again you'll see 239 points. Big move. So let's go back to the daily. Now we've had a little bit of a whistle-stop tour around what's going on. And as we've seen for the last 2 days, the market wants to take out the previous day's high. In fact, it's 3 days. So Monday took out Fridays, Tuesday Mondays, and Wednesday Tuesdays. And now we can already see that we're attempting to take this out. We need to get through this 78% retracement, through the 89, and then we go to the high of this bar, which is 16,210. Also desperate to keep this market above that 1600 level, which we currently are above here. This is this red line. You want to keep the market above this. Overnight the market's managed to do this quite nicely as well. So yeah, let's see if it'll hold at yesterday's high. If it does, let's just stop the R1 above. And below we've got the close, which is going to lend support. We've got the 50 EMA and the DP on the downside, and I suspect we won't get much further lower than that if we have a shakeout, because they're just desperate to keep this market moving back and get it back above the all-time high, 16,427. And again, still moving higher now, as I'm actually recording here. Again, you can see we're still trying to flirt with the high and get the market above yesterday's high. But don't be surprised, as we've seen over the last few weeks, get a shakeout first and then bring the market back above the high, especially if they're taking the high out in the pre-market session, i.e. the electronic now and then the futures at 7 a.m. As I said, it's been a great week, and yesterday really took advantage. You can see we're up 15,180, 5.81 on the profit factor, and a 60-40 win-loss ratio. So when it runs, let it run. And it doesn't matter about the win-loss ratio. It's about letting those profits run when they do. And yesterday, it was just seamless. It just wouldn't stop moving to the upside. And that's precisely how I managed to stay in the trade. It was just kept moving. So yeah, let's see what happens there. It's always a bit tricky after the CPI numbers. But again, the market will dictate by its technical patterns. In the S&P 500, well, this is still storming ahead. It's a lot stronger than the Dow. Obviously, it's broader market, 500 stocks. You can see that in the monthly chart that we're still desperate to get to 4525 and probably do that within the next couple of days or so, I would have thought. You can see they're already at 4456 around that area. So not far off at all. 30-minute chart, big storm to the upside yesterday. Didn't pull back as much as the Dow either, and is already heading back to yesterday's high there. The FTSE 100 also putting in a stonking performance yesterday, trading back to 62 that we drew in yesterday. Needs to get through this in the 20-bar moving average in order to move higher as well. 30-minute chart, well, there's a good up move in the FT 100. As can be seen there, 100 plus points there, isn't there? Let's just have a look. So from yesterday's low in the pre-market to the high yesterday evening, 266 points, massive move. That's some short squeeze, that is. So yeah, we've got to take out yesterday's high to have any chance of getting through that 62 and heading up to the 78. That's if the market doesn't decide to say, well, actually, the inflation's still an issue. It's this sort of swinging to and fro from hawkishness to dovishness that's creating this volatility at the moment. And the US dollar yesterday, obviously tanking, as can be seen here, and actually taking out that 108.35 that we've been looking at. We came close to it here. We then rallied back, but obviously now we've taken out this area of support. Let's just have a look at a quick weekly chart on this, see where we are. Just reset the chart. So yeah, the dollar is certainly devaluing there, isn't it? We can see this. So the 200 MA really in the weekly chart is the next downside target for this one. Let's have a look at the metals response to yesterday's activity and CPI numbers. And in silver yesterday, big move to the upside. You can see this trading through the 200 MA again once more, driving through it, and the 50, trading up to 89% retracement from here back to here. So it needs to get through this area in order to move higher. 30-minute chart, it was doing nothing, well actually apart from selling off as usual. Massive move to the upside yesterday and through yesterday's high. Gold the same, also 89% retracement there, and moving quite nicely. Needs a lot more to do, but again, they're still buying. Central banks are still buying gold, as far as I'm aware. But reacting to the inflation numbers yesterday, moving higher, back below the high of yesterday at the moment for gold, but silver different matter. So let's have a look at the gold-silver ratio before we conclude. So there we can see gold-silver ratio moving back down sharply yesterday. So silver really piling on the dollars yesterday on the upside compared to gold. Okay, that will do it for this one. Let's see what those GDP numbers are for the UK and how the market reacts to that during this morning after 8 a.m. when the cash market opens. There's no news until 1:30. Okay, that's it for me. As ever, thanks for watching. See you in the next one.